Hi clients and friends, Mike Brady here. This is one of those times where I wish I could do a video on Wednesday morning and then immediately send it to you, because every day in the last couple of weeks has been interesting and exciting. Of course, may you live in interesting times, I'm pretty sure is a Chinese curse, but it has been interesting almost every day. The market has been all over the place. Volatility's been all over the place. Last week alone, the unmanaged Dow index that we're all pretty familiar with lost 5.7%. From its high. The Nasdaq is down over 10%, which is an official correction. And on Thursday, a very interesting event happened where the market went down 1,000 points very quickly, and then kind of came back. And so they're still trying to figure out what happened, whether or not it was a mistake, whether or not it was computerized trading. Perhaps by Wednesday morning they'll have figured it out, but they haven't figured it out just yet. Market lost, like I said, 5.7%. Now the question you might ask yourself is this the beginning of a deeper decline, or is this the correction and then things will go back up? I'm going to throw up here on the screen if you want to look at it. This right here is a 3-year chart. This 3-year chart, you can see 07, 08, and then the first part of 09. Pretty kind of an ugly decline there. The fourth quarter of 08 had a very sharp, precipitous decline, just like what we're seeing now. That continued, as you can see, all the way through the March of 09. And at that point, people were so pessimistic. Let's remember that people were so pessimistic, and what did the market do? It reminded us that it's in charge, not a bunch of analysts, and it keeps you humble. Right now, that chart right there is what has happened in the last 2 weeks or so, and I'm going to explode this chart out here. The red vertical line is the beginning of this year, and you can see that decline that's happened in the last couple of weeks. The best thing that you can do is really look at your portfolio and determine whether or not you're overexposed. If you've been watching my videos for the last 6 to 9 months, I have been warning about a correction for quite some time. I do believe that this is a correction that might go on for some time, but anyone who says they know exactly where the market's going to go is trying to pull the wool over our eyes by saying that they know more than they do, because the future is never certain. I believe that if it's consistent with your goals for you to have some equity exposure, then continue to have some of that equity exposure, but make it at a relatively small amount. Perhaps if you right now are 100% equity, boy, that's probably way too much. Perhaps much less than 50% is more appropriate. Perhaps even in the teens into the 20%. Because if you're wrong and you think the market's going to go down, having some exposure so you can participate in some of the up is a good thing to have. If you're wrong on you think it's going to go down, if you think it's going to go up and it goes down, you don't want to be too overexposed. Have your head out so that it can get chopped off. So really the amount of the equity exposure is important, the timing of it, but also is it consistent with what your goals are and your individual personal risk level. Please give me a call if you would like any help with that. I've helped many people out over my 19 years, and I continue to help out my clients all the time to make sure that they are able to sleep at night, because I always tell people, I've been saying this for years, that if you're doing something that causes you not to sleep well at night, stop doing it, because the purpose of money is so that you can sleep at night and have a good future. So anyway, give me a call if I can help in any way. 303-747-6455. My company is Generosity Wealth Management. I'm a registered rep with QA3 Financial, and you have a wonderful week. We'll talk to you next week. Bye-bye.